Hey guys, it's Jason Perry with lendwithjason.com. Wanted to take a second here and educate you on one of the main things that I have been hearing this year. It has to do with the 2009 housing stimulus legislation tax credit for first-time home buyers. I want to talk to you about a couple of things. Had a lot of questions about this with a lot of my lending clients. Specifically, wanted to talk to you about who's eligible, what types of homes are eligible, what income limits there are, the effective dates for the credit, the fact of the refundability, and then the payback provisions. I do want to let you know in advance, as you most likely know, I am not an attorney, a lawyer. This is not consulting nor tax advice. Please bring anyone into your life who would be able to help you out with that respect, as far as accountants, attorneys, consultants, etc. But I am not one. First and foremost, what is the tax credit? Well, it is an $8,000 tax credit available to first-time home buyers. In the eyes of the government, a first-time home buyer is somebody who has not purchased a home within the last 3 years. All U.S. citizens who file their taxes are eligible. To talk about the properties themselves, pretty broad as well. It has to be a home that you live in as your principal residence. Can't be an investment property. Single-family homes, townhomes, condos, new construction, existing construction. So pretty broad with regard to what it does what properties do qualify for it. Income-wise, basically, and again, it's an $8,000 tax credit. To talk on the top end, if you're a single income earner and your income is up to $95,000 filing singularly, or if your modified adjusted gross income, if you file joint, is $170,000, it phases out at that point. So if you make again 95 or 170, at that point the credit would be gone. But underneath that it will either be phased or it'll be full. If you make under $75,000 as a single income earner, again, your modified adjusted gross income at $75,000 or less, you would get the full $8,000 tax credit. If you are a joint income earner, the $75,000 would double, so $150,000 or less. Again, modified adjusted gross income as a couple filing jointly, you would get that full $8,000 credit. Effective tax dates for the credit. You have to have closed on a purchase from January 1st of this year to December 1st of this year. And again, that's January 1st to December 1st. As long as you purchase a home and qualify and close within that period, you do qualify for it. To talk about what it actually is and then talk about the payback provisions. I'll talk about the payback provisions first because that's the worst part, well, comparatively. If you do sell the home within 3 years of purchase, the entire amount of the credit is recaptured on your sale. So basically, if you sell within 3 years, you do have to pay that back. And again, this applies only to homes purchased in 2009. Now, what is the tax credit? This is the great part. Basically, it's what's called a refundable credit, which means if you owe less than $8,000 in federal income tax, the government literally will be writing you a check for a refund. So if you owe $5,000 in federal income taxes, you file the credit, IRS would literally send you a check for $3,000. If you owe $1,000, IRS would send you a check for $7,000. So that being said, it's definitely a great benefit to you folks who are first-time home buyers. Again, have not owned a home within the last 3 years, qualify income-wise, and you're buying a home this year. So it's a great way to stimulate some first-time home buyer activity. Again, my name is Jason Perry. You can get more information, or if you're looking to talk about purchasing a home of your very own, visit us at www.lendwithjason.com. That's lend, L-E-N-D, with W-I-T-H, Jason, J-A-S-O-N. And again, my name is Jason Perry. Thanks for coming by. Hope you have a great day.